Welcome back to Liberty and Finance. We're doing a special live stream update here midweek because of the momentous geopolitical and metals market actions that are going on today. All the equity markets are being affected, as are the metals, and there's a lot going on in our world we're deeply concerned about. We have the CEO of Miles Franklin Precious Metals, Andy Schectman, with us, together with our producer and co-host, Elijah K. Johnson. Andy, thanks for joining us here on this quick midweek update.
Absolutely. Lots to talk about. Thanks for having me, Dunnigan. And good to see you, Elijah.
Andy, you just got off watching U.S. President Biden giving an address to the world. And if you want to look at the takeaways that you made from that, distilling down what you see to be the key messages, but what you see the impacts are of the broader events that are playing out today.
Yeah, I think that it's interesting. You look at the markets and the way that they've reacted to his speech, and they've certainly found a way to reverse what was happening with metals. To it's you speak tough. People in this country think too much about what's happening right in front of them, and people like Putin, people like the Chinese. Other countries think in terms of months, years, decades. We think in terms of days, minutes, and hours. And the market is so overtly manipulated and reactionary to the news of the moment. I find it almost to the point of comical, the way that they are able to whipsaw the markets, and a little bit of rhetoric, talking tough by the president, is enough to make everyone think everything's going to be okay, and everything flip-flops and reverses. It's very interesting, Dunnigan, and I think it's no coincidence when you take a look at silver. We had broken through the 50 and the 200-day moving average last night, in particular, convincingly. The 200-day moving average is $24.40, and this is the big one. The big technical one. When you break through both 50 and 200-day, you're setting a trend. We were up to $25.60 or 70 cents earlier today, convincingly through it. And that is with 1 day away from March delivery. 1 day away from March delivery, when there, last I looked this morning, there were 31,930 open contracts still open. And it goes to delivery at the end of business, or everything closes out at the end of business tomorrow. Things would stand for delivery at the end of Friday business. What's interesting is that if you look at the registered category, there's 81,000 or 81.33 million ounces on the registered category in COMEX. And if you divide that by 5,000 ounces, which is in a COMEX contract, that's 16,267 contracts that are open at this point, or were about 2-3 hours ago. That's the number of ounces that are in the registered category. 16,267 contracts worth of silver in the registered category. But as of a few hours ago, there was 31,930 contracts still open. That's 15,663 short contracts that would need to cover by the end of business tomorrow. And if it doesn't happen, which we have seen before, you would be looking at either a short squeeze or a silver squeeze, or they would have to pry silver out of the eligible category. Either way, we are perilously close to draining the registered category, the registered silver in COMEX. And I find it interesting that they're able to knock it down below the 200-day moving average here after Biden spoke. So what I take away from what he had to say, look, he talked tough. What else do we expect him to say? But certainly not enough to reverse course on strengthening the dollar, raising the equity markets, and crushing a gold and silver rally that had just broken through all technical resistance levels. I look at it as overtly manipulative and a desperate act when you see a bank like Bank of America, who, according to Ted Butler, had gone short, or is short, 800 million ounces of silver that Bank of America had leased from JP Morgan and then sold back to them so that they could make, figuring they could buy or cover their shorts and buy it back at a lower price, make some easy money. So JP Morgan has the silver, and Bank of America is on the hook to repay it at the same time. So interesting times, and a company like Bank of America this morning was hemorrhaging to the tune of almost $1 billion in losses, and just like that, it flip-flops, and I see silver's down 60 cents at the $1.50 move or more in the past few hours, and nothing has changed whatsoever. It's just a sign of the times, but also reeks of desperation. And I don't know, we're really close, Don, again, I think, to seeing things start to snap.
And thank you, shout out to Jedward for the contribution there in the live chat. And one question for you, Andy, that I am looking really concerned about, I guess, because we had talked about earlier, I think last month, about a possible cyber attack, but now that Russia has invaded Ukraine and US is talking about sanctions and all of that, your perspective on the likelihood of that right now and how that might impact people's finances here in the US?
Well, you had 13 countries from around, I believe 13 countries from around the world, including the US Treasury, the World Bank, Klaus Schwab, Bank of International Settlements, International Monetary Fund, all got together in Israel and simulated a global cyber attack. Jerome Powell, when asked what the biggest threat to the US financial system was, he said a cyber attack. You keep hearing the phrase cyber attack. You've heard it many times over the last couple of days. I don't know, it just seems as though we're being primed for a cyber attack. And when you put it all together, little pieces, like the article from Zoltan Pozar the other day, who came out and said that this market needs a Volcker moment, as he called it, a jolt of volatility, and he was specific to mention cryptocurrencies as well. We keep seeing the talk of cyber threat, the way that would affect things like cryptos, the way that it would affect the financial markets. And I don't know, it's ironic to think that it was the same group of people that met in 2019 to simulate a pandemic, specifically centered around coronaviruses, not the one that came out, but because of the way that they are so communicable. And within several months here, we had a pandemic. Now, a lot of life is coincidental, of course, or is it? Not sure. Now this same group is simulating earlier this year cyber attacks. And what do we keep hearing? Cyber attack, cyber attack, cyber attack. So should we be prepared? Yeah. I mean, it's just another reason to have some wealth outside of the matrix, if you will. And the sophistication of the hackers increases day by day by day by day. That I can assure you. And as a business owner that deals in large sums of money, it's a constant threat. It's a constant learning curve that we have to really never can master, but do the best we can to stay on top of it, because it is a real concern. And I think people should be slightly concerned about it because we keep hearing about it. It's like preconditioning. Keep hearing. And when it happens, yeah, they've been saying it forever. I should have listened.
From a preparedness standpoint, I'd like to interject that today, there's always this presupposition in capital markets that they say buy on rumor, sell on news, or the opposite if it's going to be bad news kind of thing. And there's often either a relief rally or a relief, relaxation after the news finally comes out. But the point that I would say from a preparedness standpoint is it's not the news of the day that really should be driving our preparedness and our long-term conduct. It's about, am I positioned? Have I done the things I need to do to prepare my family for a survivable and thrivable future? And so whether these, flash moments of, panic, that's the other thing that people have been talking about recently. I've had client after client after client talking to me about the gathering storm clouds. It's whether it's a cyber attack, whether it's geopolitical tensions, whether it's overreach and lockdowns either in Canada or Austria or Australia or anywhere around the world, France, etc., where people are saying enough is enough. I had a call from a medical doctor today who said that he's a frontline doctor. He's a general practitioner in hospitals where they get direct COVID patients coming in. He's saying that that they've only had 2 patients in the last day. They got them both on treatment. They're going to be just fine. He says this thing has blown over. It's that the Omicron, for example, has taken this through our population, and we're going to come through this just fine. And yet we're still seeing incredible ratcheted but not released increases of government controls, privacy restrictions, movement restrictions, work restrictions, everything around the world. So again, from a standpoint, it's not the news of the day that drives our preparedness. So Andy, in your role in the precious metal supply chain, could you comment on advanced preparations you've had to make over this crazy last 2 years where nobody knew what was around the corner the next month or quarter, but you had to be ready and not wait until it happened to get ready?
Yeah, I mean, I owe a lot of my way of thinking to Chris Martenson, who he's a heck of an economist, and he's an epidemiologist, I think, by education. And at the very beginning of 2020, I was watching, only because I know him, and I was watching his YouTubes. And it was because of him that I became prepared, where I went on my line of credit and bought everything that wasn't nailed down as far into the future as I possibly could, months in advance, securing deliveries from all the sovereign mints. Enabled me to keep prices low, enabled me to lock things in before premiums had risen and guaranteed delivery. And we've maintained that practice for the last 2 years. Very different than anything we had ever done before, where it was the news of the minute, reactionary. I have a big deal coming. I could call a massive distributor and have it delivered, even white labeled if I wanted, or delivered to me within a couple of days. I could call the U.S. Mint and buy $10 million worth of Silver Eagles and have it delivered within a couple of days. Now, those days are long since gone. And I guess more than anything, the way that we do business now is very similar to the way that you look at the world, and that is preparation. And there's no reluctancy about it. However, it is fully, you have to prepare in this industry for the fact that getting product is becoming far more difficult. And you know, it's a constant challenge. So the biggest difference between now and years past is just buying things well in advance and securing delivery months in advance. As an example, the UK Mint, we bought stuff months ago, and we're going to get our first shipment of them late next week, I believe, of the UK Britannias, but we had paid for them literally months ago. And then we have another batch coming at the end of March. So, you know, you pay 8, 10, 12 weeks or longer in advance. And that is what is very different. And I think you have to do that to remain relevant in this industry right now.
Right. That's the other rule of preparedness. I'd rather be 7 years early than 1 day late. And there have been numerous clients reaching out to me, some of them first timers, some of them long timers, who are making significant either real estate sales, stock sales, IRA withdrawals, 401k withdrawals, and they're moving a significant portion of that into metals because as it's been said, I think it was von Mises who said, money is what you buy when you don't trust anything else. So it's, maybe I got the quote wrong, but it's close to that. And that's the idea, is that people are really concerned that we in the cheap seats are trying to figure out which way is this incredibly complex and volatile and unprecedented combination of factors going to move. But it's impossible for the ordinary person to figure that out. So you've got to have a position that protects you regardless of what crazy stuff tomorrow is going to bring. But I'm seeing more and more people, and I guess that's a question for you. Are you also seeing more and more people making larger moves now that they've been making small incremental moves along the way, but now they're finally deciding this is time to get real?
Very much so. I think you have an awakening because inflation has crept into the psyche of the public. And I think people are very concerned about what's happening to the value of the dollar. And you don't have to be an economist to realize that the Fed has painted themselves into a corner. And I think it's starting to concern people who are paying attention certainly are noticing much quicker than the public who is just waking up to higher prices and maybe seeing the rhetoric around them, even on liberal news stations like CNBC. They're talking about inflation. It's taken over for concerns for the virus right now, over concerns with the virus in terms of being the number one issue that people are most concerned about. And so yeah, I think that I think people are beginning to wake up to preservation of capital. Look, it's easy to make money, or easier to make money these days than it is to keep it and to save it. And when you look around and see price discovery so difficult in asset classes that have all been affected by low interest rates and easy money, it's really hard to not look. I mean, it's almost impossible to gloss over silver. And look, I think one of the things that is upsetting most people, though, is the counterintuitive action of it. And today is a prime example. Dunning, we've thrown around the term misdirection quite a bit over the last 2 years, but I want people to really think about it for a moment. What differentiates gold and silver from everything else, what departs gold and silver from logic very often, is the fact that it is the canary in the gold mine. And I think people need to understand that rising gold and silver signal a whole hell of a lot more to the public, to the psyche, than people would give credit for. And when you see gold and silver rising, it I think actually probably adds to the anxiety and the concern and the fear of the people who are watching from afar, realizing that, hey, things must be bad. It is the antithesis of dollar strength. It is the kryptonite to the establishment. So the only way you can successfully hold this down or to manipulate it is to push it in the direction it's going. And for so long, no one noticed inflation. No one really noticed reasons to buy gold. We tried to bring it to their attention, but now you can't help but notice it. And what did Biden have to say today? Well, this is going to increase the inflationary fears, basically passing the buck and blaming it on Putin instead of the fact that our Federal Reserve has created more money in the past 2 years than anyone could ever imagine. And so when you're talking about inflationary fears, this just gave the Fed the ability to get a little more dovish, if you will, and maybe not get all the rate hikes that we're thinking, and maybe back off a little bit and let inflation run hotter and blame it on the war in Ukraine, just like they blame so much on the virus instead of accepting the real accountability. So anyways, the bottom line is simply this: in this environment, there is an importance, I think, by the establishment to mitigate the rise of gold and silver and step on it whenever they can. So I think people just need to understand misdirection is pervasive, and in the end, Mother Nature will have her pound of flesh. We will see gold and silver much higher, but as they often say, be careful what you wish for, because it will mean a dollar that is beginning to rapidly lose ground. Today, we saw the metals move up all day in the face of a really strong dollar. So we had, this isn't that moment that people are waiting for. That moment comes when the dollar is tanking. And when that happens, for whatever reason, whether it be that the world realizes the Fed can't do anything but inflate it away, so holding it is a guaranteed loss of purchasing power. When that day comes and the dollar starts to fall and gold and silver are breaking through moving averages, the Fed will not be able to come in and rescue gold and silver by playing with the futures market, because the power of the market will overwhelm them. But when you see gold and silver moving up in the face of a strong dollar and then turn on a dime, well, that's the plunge protection coming in and trying to save face for the establishment and for the dollar. So although it's getting closer, we're not quite there yet, but I think that day will come, and probably sooner than people would think.
And I just want to point out here, as we've been speaking, gold and silver have been falling. Gold's below 1900 again, which means it's been about a $85, $90 price swing since this morning. So what do you make of this volatility? And is this what's going to happen? Is this the new normal that we're going to be seeing, $50, $100 price swings going forward?
There's a lot of evidence that would suggest before a blow off, before you see market really move, you see increased volatility. Often before you see it go like this, if you look before it, it's like this, and then it's like that. I think this is a battle going on between the establishment and people looking to get out of harm's way. The dollar right now is center stage. And so, yeah, I think you can expect greater volatility, not just here, but in the markets themselves. In fact, one of the things that Zoltan Pozsar was saying in his article the other day, and for those people who don't remember, Zoltan used to work for the New York Fed, and he was the repo market expert that we talked about so much a year or so ago. Anyways, he said what the Fed needs to do is really inject volatility into this marketplace. You saw cryptos down 8% and now they're up. You saw gold up a few percent and now it's down. You see swings in the equity markets. You're seeing swings everywhere, and that volatility is something that I think is going to shake people, and to shake people into maybe thinking that you can't just sit home and day trade and use that as your source of productivity and get wealthy trading cryptocurrencies and trading stocks. And he says the Fed is so far backed into a corner that what we need is great volatility in the market. So I would expect to see much greater volatility moving forward in all of the markets, not just gold and silver, stocks and bonds in particular.
We have a question here that's put in the live chat stream by DGG, who says, has the demand in Canada, and you can talk about the mfbullion.ca website as part of that, but that's only part of it, been above or below or the same as in the US? And there's certainly been enough reason for concern in Canada for people. We, in fact, interviewed Rick Rule on here talking about, are my investments safe in Canada? And he had some fairly sharp concerns to share about that. But can you talk to us about demand at the retail bullion investment level in Canada currently?
Yeah, I suggest everyone listen to that interview by Rick. I listened to it. Not only is he just a beautiful orator, the way that he speaks, talking about usurping due process and the rule of law, and it being a very fascist act, is very enlightening. And to hear from a guy like Rick, who's very, very factual, very logical, I think it's concerning, no question about it. But the answer is yes. In fact, my friend in Canada, who I speak with quite often, who is one of the primary distributors, he's too busy to even return my call. It takes him an hour to get back to me. Normally a text is 30 seconds. It's more like 30 minutes. They're inordinately busy in Canada because they're realizing that the fragility of the entire system. They're realizing that, bank accounts can be frozen, crypto wallets can be frozen, insurance policies can be null and void. I mean, they're realizing that being entirely attached to the matrix comes with peril, comes with risk. And, until this point, most of us have never even thought about that in terms of risk. And while what Trudeau did is limited to a small group of people, I think, to me, what I take away from it is the central planner saying, geez, now look at this. This is what a central bank digital currency is all about. We can control the masses. Not only can we enact our monetary policy, inflationary, deflationary, whatnot, but we can control people if we don't like what they're doing. And I think, if anything, this is kind of open Pandora's box a little bit more, let the genie out of the bottle a little bit more. Because to me, what I see when I see Trudeau's actions is further incentive for the central planners to rush to a central bank digital currency. All the more reason to get out of the system. You can't be all out of the system. You got to pay bills. You have to have money in other areas. But to ignore what precious metals gives you on a day like today or a week like this, seeing what's happened in Canada, it's foolish. And what's equally interesting is that, I know you would echo this. It's been crazy busy today, really crazy busy. Why isn't it crazy busy every day when you aren't seeing things like this? Because we are thinking in terms of days and hours and minutes. And you have to, when you prepare, think in terms of the big picture, think in terms of where will we be in a year, in 2 years, in 5 years? Can we continue down this path, this inflationary path? Can we keep the markets at all-time highs when we're talking about withdrawing the needle. You know, I mean, it's like an addict. You pull that needle away, the addict's going to start to shake and freak out. And we're talking about withdrawing the stimulus, actually selling off the balance sheet. We're talking about austerity at all-time highs. How long can we continue this? What happens to the dollar? These are the thoughts that you have to make. When I talk to people about diminishing supply, I sometimes will read the comments, yeah, I can find silver, he's losing his credibility. Fine, think what you want. But I'm just telling you that I'm thinking down the road. Down the road, when you got a guy like Rick Rule, who's so damn smart, who says 1/2% of the world owns precious metals, what happens when it's 5%? If it's this hard to get now, you will not get it. So yeah, you can get it now. I get it. Premiums are 2 or 3 times what they've always been, but you can get it. But what happens when your neighbors and your neighbors' neighbors and your friends and your family say, tell me about the metal you've been talking to me about for the last 2 years? I need to find some. Good luck. So I just want also people to understand that when I talk about a diminishing supply, it is in regards to where I see things going. It's not exactly today. Today it's harder to find things. Tomorrow, I see a world where I won't be able to get it. That's the truth. And that's why I say the things that I do.
Well, Andy, I know we're both up against a top of the hour coming up, so just wanted to be very respectful of everyone's time. Guys, we tried to jump on here because it was such a momentous news day and a lot of things are moving. So we wanted to get a special midday update out there to get everyone a chance to ask some questions. There were many more questions than we had a chance to get to, but thank you, Andy, for fielding those that we could. Elijah, thank you as our producer and co-host for pulling this together on short notice. Everyone who was in the live chat, please remember to keep it civil in the live chat next time. That way we can all really find out about what's really going on and keep it civil. So thank you all for being here. And some of us in the live chat even supported the channel along the way. Very grateful for that. Andy, we'll talk to you next Tuesday for the weekly market update. Everyone, thank you for being here on Liberty and Finance.
Thanks, Darian. Thanks, Elijah.